Hi everyone, this is a technical analysis on gold. Let's start with a fundamental overview first. Gold continues to make new highs as the correction from the repricing of rate cuts expectations ended last week. In fact, if you recall, despite the higher than expected inflation figures and the less dovish Powell, the market's pricing remained largely unchanged at three rate cuts by the end of 2025. This is generally a signal that the market is fine with the pricing and we would need stronger reasons to price out the remaining rate cuts. In the picture, gold remains in a bullish trend as real yields will likely continue to fall amid the Fed's easing cycle, but in the short term, the corrections will be triggered by repricing and rate cuts expectations. Now, the daily chart, we can see that gold continues to push into new highs as it broke through key technical resistances and the buyers kept on piling in. The natural target is, of course, a new all time high. The sellers will need the price to fall back below the major trend line to gain conviction and position for a drop into the next major trend line around the 2400 level. On the 4-hour chart, we can see more clearly the key technical breaks first with the resistance zone around the 2600 level and then with this downward trend line. We now have this minor upward trend line defining the current bullish momentum. The buyers will likely lean on it to keep targeting new highs, while the sellers will look for a break lower to position for a break below this major trend line. On the 1-hour chart, we can see that we have a nice support zone around the 2640 level, where we can also find the trend line for confluence. There's not much else we can add here, as the buyers will look for a bounce while the sellers will look for a break. These red lines define the average daily range for today. For the upcoming catalysts, today we get the latest US jobless claims figures, while tomorrow we conclude the week with the US PMIs.